Welcome to the Video CPA. Good to be with you today. I'm Michael Scott. I'm your host on this channel, and it's been a couple of weeks since I've done a video, so I'm sorry about that. Last video was about doing business as a sole proprietorship, and so today we're going to talk about doing business as a partnership, which is quite a bit different, and there's a lot to partnerships, so I'm not going to go into everything, but should be able to cover some of the more important things if you're considering going into business with someone else. All right, we're going to talk about what is a partnership, what the characteristics are, what the advantages and disadvantages of being a partnership are, and that's pretty much what we'll cover today. Here's our disclaimer for affiliate marketing. Right now I don't have any affiliate marketing links on, well, maybe I do on the videos. I think I just don't have an Amazon link on the videos. But if you want to incorporate or something like that or form a partnership, I do have a link to a business entity that does that. And then our educational disclaimer. And if you've familiar with this channel, you've read those. So a partnership's a legal organization. It's a legal entity, and it's recognized by the IRS for income tax reporting purposes. Basically, it takes at least two people, and you must file a Form 1065 income tax return each year. So we'll talk about a lot of partnerships are spouses, so we'll talk about that at the end of this video, but a spousal partnership is a little bit different. So on this definition, we're talking about two people that aren't spouses anyway, and you know how a partnership pertains to them. All right, so let's look at a few things here. These are some characteristics of partnerships. They'll have two or more partners. Some of them have thousands of partners. And one of the main things is that a partnership has unlimited liability. So it could be that you're a limited partner in a partnership, and in that case you do have limited liability. But in a general partnership, if you go into business with somebody else, you've got unlimited liability. So that is a characteristic of a partnership. You must have a partnership agreement. If you don't have a partnership agreement, everything is considered 50-50 between two partners, or that you're equal between multiple partners. So you need to make sure you've got a partnership, especially if you're not intending for things to be equal between you and your partner. You must file a 1065 each year. We talked about that. Partners are subject to self-employment tax, so partners like sole proprietors don't file and don't receive W-2s. They will file W-2s on behalf of their employees of the partnership, but they are not in themselves employees of the partnership. So they do not get a W-2. They get what's called a K-1 out of the 1065, and that passes the income from the partnership over to them, and on that K-1 income they will pay self-employment tax if there's any income from the partnership. Okay. So some of the advantages of a partnership organization, you know, when you're a sole proprietor, you're there all by yourself, and sometimes you say, gee, I wish I could have somebody that could give me some vacation, or I wish I had somebody to come in and bounce something off of. But let me get that window real quick. I've got light coming in from that window, and it's looked like I'm being shaded by the shades on the window. Hold on just a second. All right, so now I don't have the shades on my face anyway, but it's a little bit not as bright. So you do combine the efforts of two or more people, which is good. You bring in additional cash to the business sometimes, and sometimes the only reason you want a partner is because he's got cash. You know how to do the work, but he's got cash, and so that might be a reason. That's an advantage of a partnership. You share the business expenses. It may enable you to pursue more opportunities with two people rather than one, and better work-life balance. You have an opportunity to go on vacation once in a while instead of being in a sole proprietorship where you're working all the time and you can't even get away from the business. And then this one, not too many people are aware of, but the way the basis calculation in a partnership works, and when we talk about basis, that's what you've got invested in the partnership. The IRS likes to see people with some type of investment in partnerships, or it may be stock or whatever it is, but they want to see what your basis is. Even in a rental house, you've got a basis, okay? And that's the risk that you're taking in this particular property, and in this case, in this partnership. So they have a basis calculation, and this also goes for S-corps. There's a basis calculation for S-corps. And you have to have basis in order to write off your losses in either a partnership or an S-corp. So the basis calculation in a partnership is a little bit easier, a little bit better than the basis calculation in an S-corp. And that is somewhat of an advantage. I mean, if you plan on losing money for several years, you might want to be a partnership instead of an S-corp. But something to think about. Now, some of the disadvantages of partnerships, okay? Unlimited liability is the big one. If your partner goes out and he buys a bunch of stuff and obligates the partnership to a bunch of liabilities, you're liable for that. And as a partner, even though you had nothing to do with it, I mean, you are liable as a partner. So any debt of the partnership you're liable for, and that is that's a pretty huge negative aspect about partnerships. That's why, you know, in practicing for 46 years, we see a lot more S-corps than partnerships, because the S-corps do have limited liability. We see LLCs popping up with limited liability rather than the partnership operation. There still are a lot of partnerships around, but I personally don't like them. And so let's go on a little bit, and I'll tell you a little bit more about that. Loss of control. I mean, if you like being your own boss, you're going to lose control. I mean, you've got somebody that you have to deal with now, and somebody is going to probably feel different about things a lot of times than what you do, and so it's going to slow down the decision-making process. Stability. Partnerships are easily terminated. If a person no longer wants to be a partner, he can hop out and your partnership's dead. You've got to start with a new business entity. Also, if somebody dies, you've got to do that. So the only partnerships that I've really seen work are professional partnerships like accounting firms and like legal firms, doctors, those types of partnerships. I've also seen a lot of publicly traded limited partnerships work. But in those, I mean, most of your partners don't have anything to do with the decisions that the partnership is making. So there are some partnerships that work, but if somebody is operating a business and say it's a car repair place, or you know they're getting sand and gravel or something like that and delivering through doing landscaping. I never see these partnerships work because the partners don't get along. I mean, after a while, that might be your best friend, and you hate him after a year or two, and you can't wait to get out of that partnership. And so that's what I see. Now, the corporations are a little bit different in that it doesn't end the partnership, or it doesn't end the entity if one of them decide to drop out. But that's what I see in partnerships. They just don't work very well because people can't get along. And other than that, I mean, as a legal entity, they're fine. It's just the social relationship that's usually the problem. Another one is your partners are subject to self-employment just like you are as a sole proprietor. So you don't get the W-2, you get the K-1. It's subject to self-employment tax and the things that go along with self-employment tax. So those are a couple of the disadvantages of partnerships. And we have a lot of situations where spouses are partners and they're working together in the business, and both of them are working. And what the IRS says is basically you're supposed to file a partnership return in that case, unless you opt out of the partnership return and do a qualified joint venture election. And there's not really a piece of paper that you file with the IRS that says this is my joint venture election. Basically, you just decide that you're not a partnership and you're going to, each of you as a couple, file an independent Schedule C with your share of the partnership proceeds on that Schedule C. And you're also going to pay self-employment tax on your share of the proceeds. That's the way that you file that qualified joint venture election, is by just acting like a Schedule C, a proprietorship. So each person, even though they're married, would have their own Schedule C in your individual tax return. And that's how that election works. But and we see a lot of those situations, and most of them are done wrong because most of them will file a Schedule C between the two of them, and they may put joint on there or something like that, but it's not quite what the IRS wants. On the other hand, I don't see the IRS coming back and arguing about that type of thing. They've got far more important things to argue with taxpayers about, and so but that's how it's done. And the partnership is, like I say, in some instances it's a good way to do business. In a lot of instances, though, if you're just going into business with your best friend, he may not be your best friend in a year or two, and that's unfortunately what I've seen. So it's the social aspects of the partnership that are the problem, not the legal entity aspects of the problem. Although the fact that they've got unlimited liability is a huge negative aspect of a partnership. So anyway, thanks for watching. If you haven't subscribed, please do so. Just hit the button in the corner there, and I appreciate you watching. We've talked about S corporations now. I'm going to hit, in the next video, I'm going to hit LLCs and talk about LLCs a little bit. So stay tuned until next time. Thank you.